Any conversation. This is Bloomberg Surveillance. Today is about stuff you're already looking for that. It's your trade brings you everything.
Reading on news here. Home sales in about 6 more minutes here. SPX is below the weekly POC. Stock has filled the gap that opened and then rotated back up, and it looks like affected by the sellers here. Just ranging right now, trying to build up. It's just building up liquidity for this news event.
Tech stocks are up about 0.1%. I think one point we could make is that these are extremely small moves, considering the huge swings.
Dow, S&P are down. Russell and Nasdaq are up.
Down almost 8% right now.
Oil down 8%.
The same is true when you look at WTI. Nvidia is up right now after investment into thinking machines after TSMC earnings, which should be, I think, a positive for Nvidia, but TSMC itself is down 0.1% in these are the ADRs. Occidental Petroleum down with the price of oil, as is ExxonMobil. Amazon up only at 0.2%, but after a massive bond offering announcement, I think it's
30% down.
Huge, and then Oracle ahead of earnings, which are expected after about down 9%. Of 1%.
Let's get more what to expect with Oracle's earnings. Bloomberg 10 reporter Ryan Tech joins us now. And this is a stock that's rated up 15% since its high last September. Ryan, what are we going to be concentrating on with the reporter?
Hey, good morning. So like a lot of the other major cloud companies, there's going to be a lot of attention being paid to Oracle's CapEx plans. There's been a lot more criticism, a lot more scrutiny of elevated spending by all these big cloud companies. At the same time, we are continuing to see pretty strong growth in cloud services as a result of AI demand. So it's going to be really a push and pull between those two ideas. How much are they spending, and then how much are they getting out of it later? In terms of the concern here, it's negative free cash flow. Free cash flow is turned negative at a time when debt is just massive compared to equity. Are you seeing this turn from a growth story into a credit story, Ryan? That's a great question right now. I know a lot of people are really closely monitoring the CDS price here at Oracle. It certainly is a great point. They're investing very aggressively in order to capture what they see as a pretty big AI opportunity. Now, their biggest customer when it comes to AI stuff is OpenAI, but there's been some reports about what is this relationship looking like. Maybe their data center in Texas looks like they took back on that. So a lot of questions about how reliant they are on this one customer. How much is this going to pay off? And then are all the investments that they're making into this, like you said, there's been some debt issuances, really wide blowout in the credit spreads, free cash flow is turned negative. There's a lot of question on, is all this going to be worth it, and over what time frame? All right, Ryan, thanks very much for joining us. Ryan Blastelica wrote the Tech Watch story on Oracle. Highly recommend you check that out and subscribe to Tech Watch if you're a Bloomberg client as well. Coming up in the next hour, Ed Denny raises the odds for a market meltdown. What he thinks now that President Trump said the war will be over very soon. Nancy Tengler, he shares her top pick with us, and she owns Oracle. So we'll ask her about the credit story that it has become. To be clear, a lot of guests coming up, including Sukhinder Singh captioning small business. This is Bloomberg Open Interest.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt. It seems to me if we look political, one of my concerns, my present concern, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. But partisanship should not be an overriding factor. Thick discourse is not civil enough. Aristotle said that democracy depends on an open debate where you respect the dignity of those with whom you disagree. I think the democracies only live if they are sustained over a period of time by a thoughtful, rational discourse. A discourse in which you respect the dignity of those with whom you disagree.
Politics, the world of business. Value in the lines. We deliver news, insight, and analysis live 2 times a day, every trading day. Balance of power at 1 and 5 Eastern. Only on to the world.
Business, markets, economics, tech, and climate. More than what you need to know. What do you need to think about?
Here's a news release of home sales higher than previous. Higher than forecasted. So of home sales higher than previous. Higher than forecasted. So
Bloomberg Intelligence. Scottish World and Wall Street.
The Fed is no.
show you higher. It's still down. It's
Great news from across the globe. We see
the SPX is about to it's hitting the value area high with the weekly value area high here, and let's see how markets react to that.
Turnaround Tuesday morning, we have markets in flux. I think that's the safest way to characterize the kinds of moves that we're seeing this morning. This is Bloomberg Intelligence, Paul Sweeney and Scarlett Blue. Paul Sweeney is off for the week, but we have a special start to our Bloomberg Intelligence program today because we're going to head over to the FIA Global Cleared Market Conference in Boca Raton, Florida. This is the Futures Industry Association, their annual conference. They represent clearing firms, exchanges, clearinghouses, and trading firms. Where our Tim Stanovic is sitting down with Thomas Book of Deutsche Börse, CME Group's Terry Duffy, Adina Friedman of the NASDAQ, Boone Chaibo of SGX, and Kalshi's CEO, Tarek Mansour. Let's join them now in Boca Raton, Florida.
Right, $43 million of volume. Duke is favored, by the way. We know wallets in the app. I want to see a show of hands. Raise your hand if you think that's gambling. Okay, so one person up here, Terry, thinks it's gambling, and I'd say 30% of you guys. Oh yeah, you can raise. All right, great. This is off to a good start. So Terry, put it just to everybody right now. Why is this not gambling?
Can you ask the same question about 0 day to expire options?
No, no, because I could do the same thing on or on another, gambling app, and I'd be 21, and I could do it in a state where the regulator says it's okay.
I think the way that it's sort of, we can sort of sit down here and debate this all. I think there's, this is kind of sort of debated in courts and let the courts decide. The legal max is so very strong about, where we stand. I think the more important thing is to sort of take a step back and think about sort of why consumers are adopting this, at the scale and the pace that they are adopting it with. And as you said, there are other alternatives, for similar type of, speculative activity. But they stimuli are engaging with Kalshi and some other prediction markets at this rate. And maybe just to sort of talk about the rate, prediction markets are fast growing compared to AI. There's, which one is going faster? I'm not exactly sure, but they're both going at a similar pace. And the most important thing with these straws is like the basic mechanics. And the reason is we have, so are you walking into a house where the house is playing the odds and where the business model of that house is essentially customer losses, but the revenue of the house is equal to customer losses. And that's the key KPI that they track on any given quarter, which I sort of bucket squared into the gambling casino, betting model. Or is it an open, free, fair, and transparent marketplace where market participants are engaging with each other, whether they're hedging or speculating, they're using the forecast to get informed by the future, or other utilities, all of which exist in our brain features.
Even if they're doing the same thing on FanDuel or DraftKings, the way they're doing it is different, so it's not gambling.
I think speculating in any financial instruments, people have historically called it gambling. Like, brain features in 1905 got legalized in the Supreme Court, and happened in America, thought it was gambling. Because what is gambling? You're putting some money to make more money on something you don't control. That is the definition of gambling in something like 20 states. Everyone sitting on this panel has gambling products under that definition. To me, what's important is I believe that a lot of people have opinions about politics, they have opinions about the economy, they have opinions about sport, they have opinions about culture. Actually, these people have more opinions about these topics than they do about, where is these sort of S&P going to land at the end of the day. Right. And from that perspective, I think, the mechanics of whether you're trading at somebody else or whether you're being stored by a house is very, very critical to that definition.
Derek, you mentioned grade, so.
Yeah, I just want to say a few things. I raised my hand only because I think it's, when you look at what the Commodity Futures Trading Commission has done, they have defined these as swaps. And when you define them as swaps, how do you define them as gambling? Even though the Bears are playing the Packers and it's an outcome based, and the same payout is done on a prediction market or an online registered affiliate of any state, how do you say it's not the same? So, but our federal government has seen it differently. So I want to be in defense of Tarek to some degree here, because it's not like he's listing illegal contracts. It's not like CME is listing illegal contracts with FanDuel. But I am hard pressed, and I think it's up to the government to make this determination so we don't have to raise our hands, so we all know what it is. Are these swaps? And because of the word, if you look at the definition of a swap, there's the word occurrence in there. And occurrence means if you exchange a cash for a treasury, that would be a swap on a treasury. There's also the word outcome in the language under the definition of a swap. So you can pull the word outcome up, and then you can say, well, an outcome is based on an event, and an event can be a sporting event, to Tarek's point. So I'm not disagreeing with that, but I think it's a very, very difficult situation we're in right now, and there needs to be some clarity. One of the things I told Tarek, I met with him earlier, is the best way for prediction market crypto to grow is to start to get some good, solid regulation around them that's sustainable through multiple administrations, not subject to administrations that are just going to take things up and take things down because of a lack of an understanding. I think that's the biggest problem we have, especially with crypto and especially with prediction. So I'd like to see new applications, new ways of doing business work. But let's do it where we all understand it, where we don't have to raise our hands.
Okay, you also raised your hand when you said it was gambling, but at the same time, you're making your first foray at NASDAQ into prediction markets with outcome-related options, pretty limited in scope. What would it expand to, or does the regulatory environment, and how you view it, not allow you to expand it much beyond those indices?
Well, I think the first thing is I agree with Perry that we need very clear rules of the road. The markets thrive when we have consistent regulation, and it allows investors first of all to be protected and to try to drive fairness into the market infrastructure. I think the second thing is that it allows us all to figure out how we can construct products that can be made available to investors in different forms to allow for them to express themselves in their views about market outcomes. With the event options that we've requested approval from the SEC to launch, we are going to the SEC because that's the options markets are governed by the SEC. And we want to make sure that within the confines of the rule base that we operate within, we can create a construct that will work for investors. And the idea of an event option, we're doing it, we're asking for launch the event option on the NASDAQ 100. So it's not on an individual stock, it's on a basket stock. It's a product that we control. And we are making it so that it's kind of an entry point for investors to come in and try to engage in options with a very simple contract, up, down, in terms of how they think about what's going to happen in the NASDAQ 100 the following day at certain price points. And so it's a very simple way to engage in the markets, but with all of the protections that our options markets provide to investors. And, Mark often brought up zero DTE, which are short-dated options. And I think that's a different construct. And those are options that allow for investors to hedge risk. They're at scale. They're essentially cleared. There's a way for them to have open interest and allow for investors to express themselves in terms of how they see the outcome of a stock or an index over the coming days. But it also allows institutional investors to hedge risk in an environment where there's a lot of fast-moving markets, a lot of change that's happening in the markets around them, and they can therefore manage risk in a shorter dated construct in a regulated environment that's governed by the FTC.
Event-driven contracts are not really new. When start for many decades, for instance, we at Eurex, we have dividend futures which have the same features. You are trading company earnings based on outcomes. So I think what you see is it is really a spectrum that you have there, which ranges from you make macroeconomic events tradable with probably also real genuine hedging needs, but then of course the spectrum ranges into sports and into other underlyings, which are more in the category of for entertainment. So I think there is still the jury out, and the US has now taken, I think, a very proactive stance, at least the chairman that we heard yesterday on these markets, in contrast to Europe. Right? Europe is much more conservative. There is a question on consumer protection. So where does it start? Where does it even start? Where do you need to really protect consumers? Where some of the jurisdictions are much more conservative. And there is, of course, a question around market manipulation, around market integrity, which I think is really crucial for also these markets to grow. But I think there is no question that there is a price discovery function, like this wisdom of the crowd, which has a certain value. It might be that the data side is even more valuable than in the end the trading turnover of those contracts.
Junjai, in Singapore, regulators have not given approval to prediction markets, and they're taking a different approach. But I'm just curious how you're watching this play out in the United States right now from Singapore. What does it tell you?
Well, there may be a legal regulatory determination here in many parts of Asia. I think the legal view is clear on where it stands. But I think what is important is whether there's probability events or prediction is a very interesting signal and engagement format. And it's what Thomas said, I think it fits in the spectrum of risk management. The question then is how do we set a bar that allows institutional investors to participate in this? Because even in our business, like the market exchange, the speed level and the weather will determine whether the ship will sail, and that will determine the next level the amount. Is that an event really it is? Is it meaningful in the overall tools for risk management to allow people to stay invested by yet managing a portfolio? So the spectrum.
I'm going to come back to you in a second. I want you to respond to something that I'm going to ask Terry, because Terry, you told my colleagues, Joe Weisenfeld and Tracy Alloway on our box a few months ago, that you don't believe right now.
Try again, yeah.
All right, good thing. You also acknowledge that you changed your mind on things in the past, in voting Bitcoin and the like. Have you changed your mind on this, or do you still think they're not a good thing?
Just for clarification, I said I didn't believe event contracts on politics of all different elections will approach.
Meaning the scale of like a presidential.
If you had an electorate of 100 million people on a $350 million people in the United States, then I don't really have a problem with two of them running and we make a decision on that. So that's it. But I do believe that the people in the United States make that by voting, not so much on a prediction. What I don't like is some of these other predictions. Politics is okay.
But when you take it down to a lower election where you would have, say, a small community of people that's got a 500 person electorate, and all of a sudden there's millions of dollars being bet on one guy versus another, I'd kind of say that it's under core principle 3 that would be deemed readily manipulable and against the law. So those are my concerns with certain political factors.
Mark, do you share that view that if they get smaller, it's more manipulable? I'll ask them, given a little bit of time, given that, the security about my business model, of course. So let me just address a few things. So Capital Play owns, I forgot, either, what is it, 94, 96% of the regulated racing market business today. So we've seen why these customers are using these products. We've seen what kind of customers are coming to these products. And we've seen why these products are important. So 2 weeks ago, the Fed put out a paper called Capturing the Rise of Macro Markets, which, no, we're not talking about here. But I encourage you all to go and read it. And, it was a very simple, you read it, Thomas. It seems like I'm sure you have it and you have it. But the takeaway of the paper is that this is the most accurate gauge we have as the highest economic authority on the planet to what's going to happen with the economy, on GDP, on employment, Fed interest rates, inflation. And this is the Fed paper on the economy, but there's abundance of papers on politics, macro, climate, and a variety of other questions on the importance of prediction markets as a sort of source of signal that is differentiated and actually more accurate than any alternative we have. And to me, that's one of the most important things, at least in 2018 when I decided to start a company that I believe I could work on. The debate between speculation and hedging and price spacing is an age-old debate in the futures industry. It's always been existing. There's always been the case, well, some people are speculating and it looks like that, or it feels like that, or it's false, and everybody's talking about dust these days. But the law is not dust. The economy is dust, right? There is sort of some ground truth, which is you need speculation, you need liquidity for these markets to achieve their purpose. Without liquidity, without speculation, my markets wouldn't work. And I will make the claims that none of your zero DT expired options will not work without liquidity. And so to me, yes, there's a question of difference in the underlying is different. Some of it is sports, and maybe you don't like it, you don't have to participate in that. But some of it is economics, some of it is politics, some of it is weather. But that difference in the underlying doesn't make the activity more gambling, right? It doesn't. When you're participating in stock option and your counterparty is fitted out and staying your local default because they know you're doing something dumb, that to me is more gambling. And that to the customers, when you ask them why trading on the better office and office and B, unequivocally, the surveys gave us 95% response rate. Well, I don't trade in traditional financial markets because I don't have an edge. It's great, I guess. I cannot gain information about these markets, whereas some of these people believe they do gain information about inflation, about politics, about sports, and so on and so forth. And the numbers show the super forecasters that are on cash sheet seemingly are outperforming Wall Street by predicting all these events, which is amazing. That's the whole premise of this market. It's on politics. That 4 years they didn't regulate up front. I think there's been
No, it just broke even.
one committee.
And I get the best entry there.
Under Tom, under any administration, we will always be committed to this, and we'll be working with regulators for rule. But there are others in the space that are based offshore and Panama that are doing, I honestly don't know what they're doing, but anything and everything under the sun. So there are things that some would argue are more. I actually agree with that. Some things are more readily susceptible to manipulation than others. I don't agree that local elections are most readily susceptible to manipulation than global elections. And there's a lot of persons who believe that.
SPX it still can't break through the value area high level. It's being protected there. But NASDAQ looks going to come back down, yeah.
You see the weird pattern that our community can apply for us. That can go into investigation that we did. We released 2 investigations recently around it. Somebody worked for Mr. Recent government candidate around committing fraud. A lot of you release investigations pretty commonly. But we are committed to building a marketplace that is safe, responsible, and will police bad actors. I'll stop there.
We've been listening to Calcia CEO Tarek Mansour. He's speaking on a panel with Bloomberg Business Week's Tim Stenbeck, along with the Deutsche Börse Group executive member Thomas Book, CME's chairman and CEO Terry Duffy, and Dina Friedman, the NASDAQ chair and CEO, along with the SGX Group CEO Boon Chai Lo from Singapore. Well, let's go back to Boca Raton, Florida.
Addictive by betting on certain sports events or other things, right? I see non-farm payrolls or so that these are hedging events, yeah, that really have a meaning. But then there's also a part where people would argue there has to be consumer protection because people get broke if they couldn't continue to gamble it back with these. Let me get some also high level principle. I hope that Europe follows America in terms of innovation and regulation and not the other way around. I really hope that that's where we land in 10 years because I think we'll be in trouble if we follow Europe. And I think we'll be much better off if the other way around happens. When it comes to customer protection, there is a very robust customer protection regime in traditional financial markets under federal government.
So yeah, the question is, what are financial products?
Well, I believe that it is openly traded a fair and transparent marketplace is a swap. Seems like Terry, at least you kind of see similarities in that definition, or at least similar in that definition. You know, I think that swap could be on a profit event, it could be on a sporting event, it could be on an economic event, or it could be on, whether S&P 500 will land 2 points up in 5 minutes, right? Now, if you're walking to a casino and they are giving you a fixed line, that is a value product. What's the difference between state regulated insurance and on exchange hedging? One of it is open, a competitive marketplace that needs global national liquidity, and the other one is you're walking into a house that's giving you fixed odds for that insurance, and it's a bilateral trade.
What about variable offsetting? Like probably that, things like that would be.
What about multi-leg options? Should we stop those?
I'm only asking whether or not you consider.
I mean, the only difference between combos and buying it is like if you buy contract X,
big in the Nordic as well. What's your view?
Yeah, so I think that when it comes to the European Union, first of all, I mean, it's an enormous economy that is really kind of untapped. I would say in terms of the potential, in terms of
Can I get an entry?
markets and capital formation, all everything you just said, and there
Can I get an entry?
for that, what could unlock that potential.
Try one more year.
Yeah, you need to start with public-private partnerships and government policies around equity ownership, around, there can be tax reform, there can be the pension plans and how they deploy their capital across the markets. We have something in Sweden, which are called the ISK accounts that are extremely tax efficient accounts for investors to be able to invest their money into the markets, any of the public markets. But they have a very, very preferential tax rate of 1% on their holdings and no capital gains tax. If you look at the launch of those that program back in 2012 in Sweden to today, the amount of equity ownership in Sweden has